Good morning and welcome to Morning Markets. Today we'll be covering three key events that will bring interest rates and inflation into focus. On Wednesday, we'll have the US inflation report. Big event for the markets. Inflation has been trending well in terms of it's been falling. Its peak last year in June was 9%. It's now at 3.2%. In August, we've seen used car prices, oil prices, and food prices all rise, and the expectation is that inflation will start to pick back up from 3.2% to 3.6%. Slightly of a challenge for central bankers, but really they focus on what is termed core inflation, which strips out energy and food prices, which are more volatile, less interest rate sensitive. Core inflation is expected to continue to come down. It's currently at 4.7%, expected to come down to 4.3%. If it comes in below, that will be taken very well by both the stock market and the bond market, because it will set that the Federal Reserve, the US Central Bank, will not need to put up interest rates up again next week when they meet. For the UK, the key event tomorrow will be the employment report. The UK has been challenged by the wage growth that currently exists. Wages are currently growing on a year-on-year basis at 7.8%. Now that's very good for the household. It means that they can continue to consume. The problem is on inflation. It risks inflation being stickier for longer, and it's part of the reason why headline inflation hasn't fallen to the same degree which analysts had expected and remains well above the central bank target of 2%. We'll also look at the unemployment reading. That remains very low at 4.2%. Given interest rates have been aggressively increased over the last 12 to 18 months, it is beginning to bite on demand, and therefore does risk that employees have to cut workers. So that'll be a key data point to focus on. And then on Thursday, we'll hear from the European Central Bank. They'll be deciding what the appropriate level of interest rates is. The expectation is that they will not make any changes to interest rates. The problem Europe has been facing is economic growth. That has been deteriorating. Demand is slowing as interest rates have been pushed higher. The real issue for the European Central Bank voting committee is that inflation remains very high. It's at 5.3%, again, well above the 2% target. Do they put up interest rates to fight inflation, or are they more concerned about economic growth? The market is thinking the latter. We'll provide more details throughout the week. That's everything from us today. Thank you for watching, and we'll see you tomorrow.